Hey guys, it is Wednesday in the heart of earnings season. What a crazy day. There's so many earnings reports from last night and this morning that it's about this time that my head starts to spin. And it certainly becomes very difficult to figure out what's the most relevant thing to tell you from what reported this morning, let alone did I miss something that reported, but that kind of is what it is. I'm going to actually go through very briefly Microsoft and Google's earnings, and then I'm actually going to talk about the energy sector because we did have Hess and Valero report, and also I'm going to just very briefly tell you what Norfolk Southern, the rail line, because that was the last of the three rail lines to report, and they had something very interesting, but definitely made my eyebrow shift up and make me want to hedge this morning some of my coal exposure for the first time in a long time. And part of the reason I want to hedge it is because you do have Arch Coal reporting tomorrow, and I think they're going to mess things up for my console energy position. But we're going to get into that in just a second. Let me share my screen. Past performance, not indicative of future returns. We always say that. This is for informational purposes, and you do whatever you want on your judgment calls. Here is, so this is what I think is crazy, right? The market is trading more or less flat, even though your biggest constituents are down 7% and 6% respectively. And you have to understand that Google A shares and B shares are actually a part of some composites in the weirdest possible way. So that's kind of interesting. And then Amazon, we know, is reporting tomorrow. I believe it's after the close. Meta reports tomorrow. Is it after the close? Yeah, tomorrow after the close. So you've got still this whole wonderful landmine that you have to walk through in big cap tech, which unfortunately still creates the bulk. You know what's crazy though, and out of all these companies thus far, Tesla actually looks like the rock star. So as much as you've got this Elon overhang, if you want an actual large cap tech name that is growing and is not showing signs of really truly stopping growth, like there's this China news that I think is actually, again, a bit ridiculous on the part of the bears. Tesla's your guy every day of the week, okay? And I know that the guy from Morgan Stanley is really smart. I'm not trying to throw shade at him, but I think he's really late to say that the issue at Tesla is China exposure. Like, have you not realized what's happened to GDP for like the entire year? You don't have, like, let's just move that over to the right. I mean, in fairness, Elon is also like, hey, it's not going to be as crazy amazing every year. But at the same time, he created and posted a crazy amazing year. So that kind of is what it is. Anyways, imagine how green this screen has to be. And I really want you to look at it visually for that reason, how amazingly green everything else is for Google, Microsoft, Apple, Amazon, and Meta, the biggest components of a lot of these indices, to be down, and yet you have the indices more or less flat. And it's really fascinating because at this point, I've listened to about 100 calls. That's why I'm a little bit dizzy. And it is very mixed, but I'm actually shocked at how well companies are coming in. Now, I want to show you what's going on because there are some strategic things that I didn't expect that I'm fascinated by in this quarter. Okay, so let's see. Economic data, I'm not going to go through. I mean, let's just call it what it is. You've got PCE coming in on Friday. Friday is your weakest day of earnings, but does anyone care right now? No, we care what happens to Meta, Amazon. We care about that basically for the end of the week, and everything else is like not going to be important until all of those guys report. Amazon is usually after the close as well. Let's talk Microsoft. Not a great quarter, but not a terrible quarter either, if we're honest. Revenue up 10, operating income up 6, EPS down 14. That looks ugly until you realize they have some of its income tax related. And this provision for income tax isn't just, oh, I got to pay more taxes. They had like some kind of thing from a previous year that then lops into this year. If you add back in the 4 billion, isn't it crazy? Like 4 billion, right? But if you add that back in, you'll see that operating income, it looks more or less like that. And so this wasn't a terrible quarter. I think the things to note is what it's actually laying out to do strategically. Obviously, they still have to swallow Activision. The gaming business is only up 3%. And so there are some pieces in there of strength and weakness, but to me, it's all a wash a bit. When you really think about the business at large. Probably only intriguing thing is LinkedIn continues to hang in there, but not at the same rate that it did the previous year or the previous quarter. We know that hiring has slowed down, by the way. So that to me at 17% is still demonstrating how strong the job market really is. But nonetheless, this is what is going on at Microsoft. But fair and square, the street had a number. That number is a little bit higher than what Microsoft actually did. Does that mean that you jettison your Microsoft shares? No, I'm holding on to this forever, right? There's a couple of stocks you don't sell. Everybody loves to talk about how you don't sell your Apple, but you really don't sell your Microsoft either, okay? Google, fair and square, this wasn't a good quarter, okay? Revenue growth of 6%, at least they're still growing the top line. My suspicion is when we look at Meta tomorrow, whatever you want to call it, it's not going to be quite as beautiful. Operating income was down 18%, and this is margin compression, period, okay? I can back out a bunch of stuff to try to make it a little bit better, so it's not as aggressive margin compression as you might think, but it's still margin compression, fair and square. Now, other bets, which you can see is a double here, but is a huge take, if you will, from operating income. That's some new stuff that they're doing in AI. And that was something that Microsoft spent a ton of time talking about. That's something that Google is spending a lot of time talking about. It's essentially advancing whatever's going on in their strategy in AI as relates to search, but really search is just a certain type of data analysis, if we're honest. Okay, come on, give it to me. We're all data people when it comes down to it. That's actually what I do outside of this, quite frankly. But there's a lot going on in AI right now, and the technology of that is going to be technology of future. That said, we are still getting a very weak earnings report from Google. Do you sell your Google here? I mean, it really, I'll probably hold on to it for the rest of my life, to be honest. Will I play around with it on the options market? Yeah, I will. But I don't think you puke it out, because the fact of the matter is it's still growing revenue. It still has, and this is the right call. And let me show you the other way. Let's look at this other view of the income statement. It's a little bit easier to see it. R&D up 33%, sales and marketing up 26%. They are also going the way of Facebook, which is, I'm not going to get credit on this quarter because my operating margins did legit slow, and it slowed, just in case we're confused. It slowed on the services business, which is actually the YouTube. So YouTube slowed, and then the mix of what search and network is a type of mix that makes it look a particular way, so that the operating compression happens. Okay, but R&D up 33%, sales and marketing up 26%. I actually think that's the right call for them. So I'm very cool with that. Now let's move on from that. I think what you do is you trade around it. Gives me a great opportunity to promote my colleague, who is an amazing day trader, and he really is someone that I would love for you guys to take a look at. Richard, you can find him on gurula.net, which we're always talking about here. But I think Google and Microsoft, at least for this next quarter, are going to be really fun for the day traders, and that's Richard's world, and he's excellent at that. Okay, Valero. Let's talk Valero. It is a refiner, and it got clobbered yesterday, recovered a little bit, I think, today, but it's going to dance around. And it's because the analysts have insane estimates on some of these companies. I'm just going to say it that way. I want you to look at this revenue. This is almost a double on the revenue. And then here's the bottom line, right? 463 million last year versus 2.8 billion. But then after you look at share count, after you look at all this other stuff that's going on, you have almost a times increase in earnings per share. Okay, if you look at this from an enterprise value to EBITDA basis, you can see very clearly that it is incredibly cheap. And that is because it has essentially taken this beautiful cash that it's printing like a printing press, and they're paying down some of its debt. So the refiners have to do that a little bit because they're coming out of such an ugly scenario. Other people in oil and gas do not have to do that. And that is an interesting thing that we're going to dialogue on a little bit more. But in general, I care on Valero, not because I have a position on Valero, but because, as you know, here at Gurula, we've been very bullish. Carl Icahn's company, Icahn Enterprises, ticker IEP. And I have said over and over again, it's the refiner that's paying that dividend, guys. So this tells me he should be fine to give you that dividend yet again. So that's what I want to just highlight from Valero. I think it's the safer way to play because, as you can see from what Valero did yesterday and how it traded, the street loves to clobber companies because they don't make some crazy analyst estimate. Okay, so that's how I'm thinking about it, and that's how I would play it. Let's talk about Hess really quick. This was their earnings. Hess is more onshore and offshore E&P. Okay, so it's going to be much more a driller. It does have to do exploration and production, and it's actually significantly more leveraged to Europe. I don't think I gave that slide, unfortunately. They've got what I wanted to show you. Let me see if I actually just have their earnings up here. Otherwise, I'll just talk through it. But you can kind of see as well. Oh, good, I do have them. Okay. Actually, let me show it here first. So you can see from this as well, from my screen, here's their earnings. Again, almost a double from last year, but even sequentially, you still have stronger revenue, okay? And you can kind of see that it's just doing wonderfully. How's net income doing? It's a little bit lower from sequentially. Again, the third quarter is really about buying for the fall period, even though some of it is actually about buying for the winter. Winter is coming. They're not concerned. The reason this number isn't higher for them, as they mentioned on the call, is they had a couple of issues where they couldn't pump as much oil as they wanted to. But essentially, you can see this is a threefold increase from last year. So these guys are just printing money as well. Okay, I want to show you a couple of things here, and then I'll just talk through the other stuff that I'm seeing with Hess, because it's really a little bit less straightforward. With Hess, let's see if I can give you the international mix. They do have some midstream, which is the refining business as well, which is making out like a bandit. Okay, this is where so Guyana, Malaysia feeds Asia, essentially. The United States does a mixture of what's going on. Let me see if I can show it. Geez. Okay, I just want to kind of show you the pricing that they're getting on oil and gas as to why I think you have to be really careful when you're looking at these companies and being like, oh gosh, oil is traded down so much. Woe is these companies. No, okay. This is what they're up against last quarter. They won't be up against tough comps until really, I want to say the first quarter of next year. First quarter of next year, starting February. So we still have one more quarter where the comps are fairly easy. And then you have that shoot up initially right out the gates for COVID. Okay, so that is one thing. But the other thing that's kind of relevant here is that you do, I mean, they're making plenty of money off of these prices right here. Okay, so the other thing to note as well is Guyana, which is going to feed Europe a little bit better, is getting a much higher price than the United States and Asia. So I wanted to show you that because it's very clear in Hess. So what it does imply is that in general, how these things are going to trade is going to come down to what people estimated and how much people want to play around with it. Now, the last thing that I just want to talk about as relates to Hess is I was really surprised that even though there's a really tiny baby stock buyback, there's not really any extra dividend action going on here. There isn't any debt pay down going on here. And you think about why. The reason why is they want to use that for CapEx to pump more oil. Okay. So realizing that interest rates have increased, and this is the fascinating thing because this has more implication than just on Hess. Okay. If you have a bunch of debt and your debt is actually on the books for a number that you're excited for it to be at in a rising interest rate environment, you don't pay it back. You just have a low cost of capital. And I think that more than one company is going to be in this circumstance. We're going to see some of it this quarter. We're going to see more of it in the quarters to come. And I think that's going to throw off people that are thinking, oh my gosh, rising interest rate environment is going to totally hurt these corporations. Well, guess what? If these corporations are still making money, then they can actually use that low cost of capital to fuel their business and be more competitive relative to, guess who? Europe. So I'm just saying it's another really intriguing thing that I'm starting to see in a couple of these balance sheets, in what people are doing as a CFO of a company to kind of manage through this circumstance. Now, back to our story, there is one other thing I want to share before I stop for today. And that's Norfolk Southern, which NSF really did have a really decent quarter period. They guided to lower economic growth. And so they guided kind of single digits growth going forward, I believe. Not 100% sure. Don't quote me on that. But the quarter was fine. No, you know what? That's not right. They go take a look at the guidance. The guidance was fine. Nothing was wrong with NSF's quarter, in my opinion. I don't know how people want to trade it, but I will say this. I want to show you this, okay? Energy market tailwinds drive revenue growth in the third quarter. The coal number was crazy, and even volumes were up. My concern is this. In the discussion about the coal, now, NSF, just so you know, that track runs, again, on the eastern coast for the most part, straight down south. It is going to touch Arch Coal, okay? So did coal get shipped out? Yes, it did. When people asked why their go-forward guidance, where are they concerned? They're not concerned about thermal coal. They're concerned about met coal. And they're specifically concerned about met coal because of China. And that was something I hadn't heard anyone have any concerns about coal whatsoever. As we know, on the eastern seaboard, coal got shipped. We can see that in NSF. We can see that in CSX. Now, whether or not that's going to continue going forward, it's really met coal. They're not seeing that issue with thermal. They're not seeing that issue with industrial. And because Arch is the first company of the coal companies that reports, and they have a lot more met coal exposure, I am concerned about how EIX console energy will trade. As y'all know, I've been huge bulls on it. You know, it does look to me like Peabody is probably going to have some struggles given how much coal shipped, but we won't know till we know. In theory, they're in that Powder Basin because they're mining thermal coal, but in practice, they've had issues on shipping it out. So with that, I will stop sharing, and that's how I see it thus far. How's it going? What a crazy market.
Yeah, hi. Okay, Meta reports today.
Yeah. I mean, this Google report does not bode well for Meta, but we shall see.
Exactly. Yeah.
Yeah. I know, it's like so tough. Like, what else really? Everybody's got to absorb all these earnings. I mean, it's clear to me that they're coming out so fast and furious, and each company is giving a picture of a different company that you're getting like a half a beat before there's a stock reaction half the time.
Yeah, I mean, but on the bullish side, you've got, the dollar's coming down dramatically, and rates, Canada didn't, I think rates are nearing a top.
Yeah.
So that's, long-term overall market, very bullish.
Yeah,
but near term is going to be tough.
Near term is going to be tough. We do have Europe also reporting. The banks are starting to report, and we'll see how they do, because that's a systemic thing that just has to continue to resolve itself from ever since Archegos blew up in a blaze of glory. So that might be one little baby systemic thing, but they should benefit just like everybody else from increased net interest income from rates going up. And the intriguing thing is truly the pension funds. You can kind of see it in how fixed income did well. It's like the only portion of capital markets / investment banking that did well this last quarter. That can only be the pension funds locking in some sort of rate that allows them to not have so much concerns about the liability portion of their balance sheet. That actually means that corporations that have pensions, right? That pension expense is several hundred million half the time in my space,
Mhm.
but can vary. And also bigger pension funds probably have a lot of pressure taken off of them.
Right, right.
The world's not as bad as I think people, even I want to be a little bit bearish because it's kind of fun to be bearish sometimes. Like it's hard to be truly aggressively bearish.
Right. Yeah, I agree.
I mean, Europe maybe because the winter is coming, but like the US, it's hard to be truly bearish.
Right. Well, it was all this recession talk. I mean, I'm trying to wrap my head around how you're going to get recession with full employment.
I know. I agree. I mean, slowly but surely companies are not hiring, but they're not laying off in drones quite yet. And, if it's going to happen, it's not going to be the fourth quarter because you still have some seasonal hiring. Like right now, there's been a big, gigantic pause on letting people go because you do have a seasonal demand that happens at this time of year, regardless of whether or not the sales come in extremely strong relative to the previous year.
Got it. Okay. So, I mean, maybe
So
they're
it's
talking
limiting.
about their specific company's earnings, like Amazon, Jeff Bezos. He's saying recession. So maybe he sees numbers on Amazon.
I know you want me to be bearish Amazon. I'm scared to be bearish or bullish any of these names because how they're trading is so weird these days. You know what I mean? Like Google, I was a little bit concerned on the ad revenue side. With Amazon, they do have a little bit more exposure to consumer electronics. So I'm not, but like, I mean, it's not like, you asked me yesterday after Microsoft reported how the cloud business do. It's still doing okay, but it's not like gangbusters, if you will, at Microsoft and Google like it was previous quarters. I don't know. I mean, do I think Amazon does what everybody else does, knowing that it's not going to get credit for this quarter, or if it does, it'll be short-lived? Yeah, I do think they plow a bunch of money into CapEx like everybody else. I was actually shocked that Microsoft's CapEx number didn't come in higher. Sorry, not CapEx, R&D number didn't come in higher, to be fair.
Right. Yeah.
I actually think spending on R&D
Microsoft got clobbered.
What's that?
Microsoft got clobbered, and they were okay on it, right?
Yeah, I mean, it wasn't like in this environment, I would count it as a win. The market doesn't want to give them a win. That tells me they should have spent more in R&D. Why not? You know what I mean? You're just not going to get credit for it.
Damned if you do, damned if you don't. Okay.
Yeah. I mean, at Microsoft is a very telling story to every company as they do their planning through the end of the year. You're not going to get credit. So let it go. You know what I'm saying?
Got it. Okay, May. Thank you. Excellent. Excellent.
All right. Good luck, guys.
So Meta, you wouldn't, I mean, I'm tired of selling Meta.
Well, I don't know.
I feel like a bully.
I know, I do too. I do too, because it's not like you and I hate the guy or anything like that. Do you know what I mean?
Right.
Like we're probably, both of us are in admiration of what he accomplished from a young age to this age. I mean, he's a really young CEO, if we're honest with each other. But like, no, I don't know. I did have some shorts on, I'm not going to lie, but I'll probably lighten it before the end of the day, just because I'm traveling, on top of the fact that like, I don't know which way this market's going to trade no matter what he reports.
Okay. Well, rule of thumb, he's spending like 10% of revenue on CapEx. That's not
R&D. Yeah. Yeah. Well, CapEx is R&D for him, right? Yeah.
Right. So, that's not extravagant. I
think he plowed a little bit. Yeah, it's not extravagant. And honestly, if you're gonna, like, if you're just not gonna get credit for it, just do it. Do you know what I mean?
Yeah, exactly. He's like, they're gonna give me credit anyway.
Yeah.
Exactly. Good point.
It's the right strategic call. Like, you know what I mean? I don't own these companies for a year. Companies like this, I don't own for a year. I own them. I'm in it to win it. Do you know what I mean? Like for the long haul, because I do know that, like I guess the real question you have to ask yourself is Facebook Yahoo? Do you know what I mean? Yahoo was not fun. And a lot of us were old enough to be there riding it up and then riding it straight back down if we didn't get out of it at the right time. I mean, it's a little bit different because Google came and then,
Google, right?
yeah, and really ate all of that search business. And then Yahoo just floundered and bought the Time Warner deal, et cetera. But like Facebook's not doing stupid stuff like that. Do you know what I mean?
Well, I
Like, we
mean,
need to come up with the
they,
next
all
thing.
they bought Instagram and they bought WhatsApp. So, I mean,
Yeah, which they did at the time that they bought it were great. Do you know what I mean?
right.
Those were good, solid purchases. But what they're doing now, does he still have to come up with something that we're all going to be super excited about? Yes. Has he done anything stupid yet? No. Do you know what I mean? He's doing actually exactly what you need him to do right now, which is think about the business for the future on how it actually grows and creates massive value. So far, I'm not upset with him. I think you damned if you do and you damned if you don't right now.
Got it. Okay. Thank you, man.
All right, take care. Bye.